Hey guys, in this video we're going to talk about correlations between and within a particular sector, and also how potentially to trade it. Also some of the stocks you should be watching today, January 18th, and not necessarily just today. I mean, the stocks I'm about to show you could be taking a drop for multiple days, so it could be worthwhile to keep them on your radar for more than just a day. So the culprit that began the show for this sector is Discover. DFS is the ticker. So last night it reports earnings. The response to the event, highly negative. We got a move 3 formation on DFS. And yesterday, if you're part of the paying member group alert, guys, which by the way, you can always sign up for the paying member alerts by scheduling a call by talking to a coach here at 13marketmoves.com or 13mmtv.com. So basically, yesterday we sent you a message, and I'll explain on the next few charts why we did that. But we send you a message to short COF, which is Capital One Financial. And so far yesterday, I've taken the shot of the screenshot. Yesterday, COF was down about $4. Now today pre-market it's trading between like around 123 area, and we think it could sell off a lot more. Now, for those of you who've never traded Capital One Financial, okay, it trades as if it never makes big moves, but it does. There are instances where it drops to the magnitude of 7% on a day. Well, 7% on $100 stock, guys, that's $7. It doesn't sound like a lot, but when you look at what the options on COF normally go for, I mean, you can scoop them for pennies. I mean, pennies on the dollar. So this $4 move, if it's indeed going to open at like 122, guys, I mean, that is an easy 5x, and it hasn't even reported earnings yet. The only company that reported earnings among all the credit card companies is this. So now let's take a look. Why? You're probably wondering, why didn't we short? Actually, I gave it a serious thought, shorting it ahead of the earnings report, but I stayed away from it. And there are multiple reasons for it. So let's glance at the chart. DFS, guys, I mean, it's a dying animal. If you take a look, it's 3 strikes and it's out. DFS Financial. So you got a gap down. Guess why? There was a concern about delinquencies. That's 3 quarters ago, right? The concern about delinquencies, bad numbers, okay, that's last quarter. And now, if we're to go on stock charts, put in DFS, it's going to have another gap down today because the stock looks like it's on track to open under this area right here, which is like $98. So you're going to have 3 quarters, 3 gap downs. I would say 3 strikes, you're out. I mean, this is probably, I don't know if it's based in California, but I mean, this thing is done. So, and I think all these other names, they're going to start folding like dominoes. So we gave you this alert yesterday when it was trading probably like 126.70, 127-ish on Capital One. So it's on track to open like 4 or 5 points lower. So we'll see exactly what it'll do. But if it bounces, it gives you a really good opportunity to short it, because look, everything is here as far as your shorting opportunities, as far as your signals, as far as your accumulation. A ton of people can begin selling. But one thing is clear, okay, guys, we getting one bear message after another bear message. Basically, first, the banking stocks are reporting earnings, and they cannot catch a break. As a matter of fact, now if you review every banking stock since the earning report is lower than where it went to in the earnings report, and some of them actually produced some decent trades. Now we have the credit card companies that, guys, I mean, you don't get a chart like this for no reason on DFS. And the cool thing about it, as a short seller, as someone that makes money when stocks drop, okay, I mean, this has not spilled over to the other parts of the market. I mean, the market is up, and I'll record a separate video on it, because yesterday we had an opportunity for all the semiconductor stocks to drop and look like we're going for a move expansion. Today it's a whole nother story. They interpreted the TSM earnings report pre-market as a wonderful thing, even though the earnings are down almost 20%. But look, this temporary bounce could be a great short opportunity, but that's for another video. As far as this should have been enough for the market to open lower. I mean, this is how 2008 started, okay? The delinquencies are higher. You can no longer hide them. It is official. Credit card delinquencies are up. Now, Discover is not some company that gives someone a credit card with a 580 or 650 credit score. Discover is the company that, they work with 700-800 credit scores, and the delinquencies are up among people that have excellent to immaculate credit. So what does that tell you? Shit is about to roll over in a big way. So COF, guys, call us today at 13mmtv.com, schedule a call. I'll give you a perfect strike. This could be a whale trade with a certain strike and a certain expiration on COF. We're going to try to catch it on the bounce. This could be a whale trade. But look, all the pre-existing conditions were here. The rollover on the bear divergence, guys. Everything just beautiful setup, right? And if you're part of the pay member alert group, we gave you actually 2 alerts on this. We also gave you one right here closer to the top when it was like above 130 bucks. It was like 134. But the most recent one was yesterday. And so now it's going here, okay? And it's going to open right here, and I think it's going to finish the day lower than where it's going to open, but not with probably first trying to attempt to make some kind of bounce. So let's look at the other stocks, okay? AXP. So some people believe that the money is going to rotate now from DFS to AXP. I don't think so. I think this sector is going to get shot. It's going to get shot. And so we share similar characteristics here. You've got, as the price reaches the highest point, RSI is not going higher anymore. It's actually going slightly lower in relation to the prior highs. The only bullish thing was here that I think is going to make this now. The blue line is going to slowly making this move to cross the orange line, just like it did right here. So we're maybe at this point right now, and so the blue line is going to start doing this. And before you know it, over the course of the next 2 weeks, this blue line could intersect the orange one to the downside. So this is a moment to where it's still good. It's still a good opportunity to short AXP. But my favorite would be Capital One, because they have, Capital One does different credit cards. They don't just do credit cards for perfect scores, right? Capital One's got a portfolio of mid-range FICO scores, lower FICO scores, excellent FICO scores. So I think their portfolio is going to get shut down much faster than some of these other companies like AXP. But this would be a good short. So the next one, let's bring this one up. No reaction, right? I mean, this is the big daddy. The Visa, nothing, no reaction, nothing, no signs, okay? Besides, we see a clear divergence on the RSI. Bear divergence, that is, so stock shoots up to this level, 262. RSI shoots up right here. Now we're at, as of yesterday, right, the 17th of January, we're up here. But the stock fails to make any close move on the RSI like it did right here. Actually, it's lower than this point. So bear divergence is here. Real quick here, MACD can turn bearish. A ton of people own this where they could begin sell off. Guys, Visa, despite of the fact it has not reacted to DFS fiasco, it can drop. It could definitely drop. But that is one stock that doesn't move a whole lot. So got to be careful with that when we select the strikes. MasterCard, right? I mean, from 360 to 427, RSI is definitely struggling. I think this is the top for MasterCard. This is the top. 430, I mean, if you can short it above 425 today, I mean, this is a good entry. It's going to struggle to go higher. And I mean, the path of least resistance on MasterCard is going to be lower, guys. So These are easy, right? When you see one stock like DFS, right, is doing this, other stocks are going to react. But sometimes you will have a slow motion reaction when something that should be happening is not happening, and you're sitting there in front of your screen wondering, well, what the fuck? Am I the only one noticing these things? And so sometimes the market is just going to have a delayed reaction. But so we're gonna have some nice gains on Capital One. You could have had too if you were part of the paying member group alerts. Sign up at 13mmtv.com. The way to sign up is you schedule a coaching call, talk to an actual person here at 13 Market Moves, and get signed up. So guys, these are the stocks that we're keeping on the radar, because now we've tracked the banking stocks, all red moves. And now I think this is the sector that's going to follow. So don't miss the next video on the semiconductor stocks, because I'm going to outline a really good entry point on those, and some other cool videos coming up today, guys. So don't miss a ton of interesting trading ideas, and some sectors, they're just like boom. There's one sector I'm going to talk about, super bullish, guys, just super bullish, and you want to get in the next 5 days, absolutely, because it could be too late if you don't. So if you're new, guys, follow the channel, subscribe, and the most important thing, I don't even care if you fucking subscribe or not, just schedule a call, because that's the path. I mean, you could be watching these videos and watching and not taking any action, and guess what? Your trading account is not going to change. The fastest path to changing the way you trade is work with a coach. Because 2 days ago, I posted a video pre-market on DWAC, right? And so the stock at the moment was at $16. So it goes to 21 bucks that same day. And it goes to 23. And then the next, after hours, it drops. And it opens like the next day at 20. So those people that watch the video, they're like, oh my God, it's fucking dropping. So like, people cannot hold a trade if their life dependent on it, right? They jump out within minutes. Okay, we're 25 on DWAC, and before you know it, we're at 28 on DWAC. And so those people that panicked at 20, they watched this meteoric rise in DWAC all the way to 28, almost 29 bucks. So basically, since we called the stock, it basically doubled. Can you imagine what your options did? I mean, there were 40-cent options we were buying at the 20 strike. 25 strike we were buying as cheap as 15, 16 cents. And those went up to like 4 bucks. Do the fucking math. So that is why you could keep listening to all these trading ideas here and not getting any substantial traction, because you will jump out at the wrong time on a perfect trade and you will screw it up. So if this is something you're struggling with, this would be a reason for you to schedule a call right now. Talk to a senior coach here at 13 Market Moves and get yourself going in the right direction in 2024 as far as your trading account. Let's roll, guys. I'll see you in the next video soon.